Hello and welcome to this month's edition of the Whisky Investment Podcast by VCL Vintners. I'm Alwynne Gwilt, whisky journalist, and this month we're delving into the investment and whisky landscape, looking back at 2025 and, picking apart what was a potentially fairly difficult year across the whisky industry and looking ahead to 2026. Are there any glimmers of hope? We will find out. Today I'm joined by Ben Lancaster, co-founder of VCL Vintners. Ben, welcome to the podcast.
Thanks for having me. How you been keeping?
Very well, very good.
Excellent.
It's really nice to see you again. Now,
same.
you've obviously joined us before on the podcast, so it's great to have you back. And so hopefully our listeners are very familiar with you and your role. But has there been any changes over the last time, since we've last spoken?
No significant changes. Workload's gone up,
yeah.
So that's a good thing. I always say that being busy is not a bad thing. But as I've mentioned before, I do more than one particular role,
yes,
so it's many hats. Yeah, exactly. So it's been a busy year.
Yeah,
not a straightforward one from the market standpoint, but it's been a busy one, which is something we shouldn't gripe about. So
yeah, absolutely. I mean, we're going to kind of really delve a bit deeper into 2025, which I think the whiskey industry made a lot of headlines, not always for the best reasons, certainly. How did you find it from your perspective, and was it as difficult as those media headlines made it out to be?
I suppose not necessarily from the investment standpoint. I think if you're broadly looking at the industry, it's definitely had its woes. It's not been the strongest year from a more consumer element, but from the investment aspects, look, there's always opportunities, and that rule applies to any investment you work with. Exactly, yeah. Whiskey's no different. So one of the things we really made a push on was just making sure that we were looking out for opportunities as they come along. Yeah. And it's fits and starts, right? If you went back 5 or 6 years ago, there wasn't a lot of juice on the market. You looking at the market today, there's more availability. So again, it's about how you look at it. It's look at the headline, but what's beyond that? The market's not as buoyant as it was, but there is always going to be an opportunity if you're looking for it. And I think that's what we've done this year is really to make sure that we were, at front and centre to try and take advantage of those opportunities as they come along, and trying to be a bit more proactive with things than reactive to the state of the market. Yeah,
for sure. I mean, you mentioned, I think that's a really good point about the availability of liquid on the market, because for the last couple of years that's been tough, like just even for blenders, people to get a hold of stock in terms of what's in warehouses. So with that decrease, has that meant prices have dropped slightly for that entry point into casks or into investment side of things?
I think it just depends where your entry point is, and we've probably taken a shift of strategy as an organisation as well. There's two ends of the market. You're going to have that younger age statement. Yeah. And you've got a bit more maturity, and the mature end of the market is, again, we're pretty fortunate with what we have under management and things we can access. But because of where the market was last year, and twofold really, one as sort of looking at the market as it performed and making sure we were getting the right stuff, but also that younger end of the market's not been massively impacted from a pricing standpoint. It's pretty consistent, and it normally is generally. So we've looked at that more, but that also ties into the fact there is more availability than than at any point probably previously. So that's meant that we've been able to access liquid from certain distillers that maybe we haven't had access to before, or at age statements we've not had access to before. So it's been a good opportunity for us from a buying standpoint. So I think on the whole, our approach has been looking at the best opportunity for the clients, irrespective of what age statement that particular cask is.
Yeah, for sure. I guess we looking at that liquid availability, that you get that oversupply. We saw that certainly in the 1980s when the whiskey industry had that massive crash because there was just too much liquid available in the market. Are there concerns of that now? Are there worries that there's just too much out there?
Well, I reckon if you were sitting on casks from the 1980s right now, you'd be pretty happy,
So
it depends on how you look at it, right? At that point it was dreadful. Today you'd be like happy days. So
of course.
I don't think an oversupply or more availability of stock is not necessarily a bad thing. I think that the market is bigger now, right? You've got that consumable element, but there is a bigger investment market now. So it's distilleries look at cash flow, they look at ways of realising that, and that it could produce a good alternative to the narrative in terms of more availability of stock, a bit more cash flow for distilleries, and ultimately investment opportunities for those people who are willing to take it.
Yeah. Have you been surprised at some things like, I know this is moving away from Scotch, but certainly, Jim Beam saying that's it, no more production for 2026. Is that was that a shock?
Yeah, I suppose, but not really. It's a shock when you read the headline, naturally, right? Yeah. And you see that, and it's like, okay, but that's just a strategic decision that they've made, and whether they've, part of the decision was looking at, the sort of operational side of things and taking some funding away and putting it in there, for instance. And it's not unknown. And it's particularly for bourbon, and Kentucky in particular with Jim Beam. But one of the things that we did as a company was, looking at Tennessee whiskey as well, for instance. It's a smaller market, but there's a good opportunity there. And Tennessee seems to be at the minute, holding fast, where Kentucky and bourbon from Kentucky is a little bit different. But it's all about view and perspective. And in Scotland, some of the distilleries have taken the same decision, right? They've turned the taps off, but again, they've done that historically over the last 3, 4, 5 years. Some distilleries have done that, and it's just about stock flow, and it's prudent. It's they don't want to sit on millions of litres of liquid that they don't know what they're going to be doing with. So, I don't think it's not a shock when you read beyond that, right? Because whatever the rationale is behind it, Jim Beam's owned by Beam, right? Centauri. So the big overseers are making some decisions there. So it's there's a micro and a macro perspective, and it's sometimes if you go beyond the macro, look at the micro, you'll see that there's a rationale and a reason. I think broadly though, on a point with bourbon, you've had a Trump tariff with Canada and things like that. That's probably played into it a little bit more. But the domestic scene for bourbon in the US is still pretty strong. I think it's overall. I don't think you'd be alarm bells are ringing. It's just a case of, well, that's just where things are at. Hold steady
for a little while.
Hold steady, exactly that. No one wants. If you start behaving like a distressed buyer in that environment, then you're going to get treated like one. So it's just a case of holding fast. And Jim Beam's it's the biggest selling bourbon in the world, right? So it stands to reason that if there has been a dip, well, you wouldn't keep producing at the same level that you are, right? You've got limitations on space. If you carry on producing at your current quota
and you're not selling it,
where are you keeping it, right?
Absolutely.
Individuals aren't going to put it in their front room and use it as a coffee table. So exactly. Exactly. But I think it's just par for the course.
Yeah, we've talked in the past about geopolitics as well, and the impact of that on certainly on the UK environment. Now we're seeing definitely some bigger impacts, as you say, tariffs, where those lead to, where they actually net out, and I think nobody's totally sure yet. Are there any particular areas or things you're keeping an eye on from an investment perspective?
No, I think the US is, everyone knows what's kind of what you're in store for over there, right?
Yeah.
And look, from a VCL standpoint, for our perspective, we've looked primarily at the domestic side, the domestic market for bourbon. That's where our intention is this year. So, in terms of whether it leaves the US or not, has no bearing on what we're about to do and what we're planning on doing for 2026.
Yeah.
I think with regards to tariffs generally, we talk about the sort of macro headlines with Scotch, and obviously there's a dip in the market, but then there was a lot of other things that were really important last year with trade agreements with India and Hong Kong tariff reductions on imports and things like that, and recognition of Scotch in certain areas of Latin America, right? So those immediate impacts, there is an underbelly there of other things that are happening that in the next, say, 12, 24, 36 months, if that starts to have the impact that everyone expects it will, then all of a sudden the market outlook is very different, right? And that's why whiskey's not a short-term investment. It's not, shares will fluctuate and they will move around quickly in minutes and days, whereas with whiskey, it's a longer-term investment. So if you're holding those casks and you're holding those assets and you take the right approach, then ultimately you can see through whatever's going on,
whether
geopolitically and economically speaking as well,
Yeah, absolutely. I think it's a good point, because we did a whole podcast last year on the India trade agreement and the potential impact of that down the line. We're not yet seeing that. Are there though glimmers of hope? Where are you finding positivity, I suppose?
There is, but the thing is, even the conversations we had, like India was never going to be a black swan event. It was never going to send prices through the roof. It's going to be a slow, steady trickle effect, because you're navigating a different market, and they have different requirements. So if you look at the success that brands have, a lot of that starts with education. And in the Indian market, pricing is a big thing, because what they're used to in terms of what they spend is very different to maybe other areas. So there's a whole process that's going to need to be gone through in order to sort of maximize the impact that India can have. But there's no doubt in India in terms of what it can be. It's just making sure that that it's done in the right way. If you're looking at it from a distiller or a distillery owner standpoint, it's a 3, 5 year, 10-year play. And again, but what it is, you're sowing a seed there to sit in the shade under that tree in 5 or 10 years' time. So I think that's one thing to be positive about. It's not, today is today and tomorrow is tomorrow. And I think if you've got to live in today, but you've got to look at what is down the line. I think India can be a big thing, but I also think that the likes of Latin America. And you've still got strong markets, and you've still got strong consumption from traditional areas as well. And you're navigating a different world in terms of drinking habits and consumption. And again, you look at, there's been you could look at a slowdown generally of maybe liquid and consumption on that side, but then you look at RTDs and the ready-to-drink market, that's booming at the moment. So is it the fact that people are drinking less, or has there just been a shift
in what they're drinking and how they're drinking it, and the occasion that they're drinking it?
Exactly. And to your point in terms of green shoots or looking ahead and what it looks like, that is what it looks like, right? There's always going to be an ebb, and there'll always be a flow, and there's always going to be changing and shifting sands in the market and the dynamics. But it's, again, like I said earlier on, it's being proactive, not reactive to how they are, because the moment you start reacting to them is when you're gonna your strategy changes on a whim. So it's just it's being consistent, and we've been pretty consistent as a company over the last 16 years, and it's I'd like to think that we've reaped the rewards of taking that type of approach.
Absolutely. Panic never gets you anywhere.
Exactly.
Especially on an investment side.
Sell more papers when you make everything so miserable. And that's just not just whiskey, but life generally. So it's rather than those snapshots of headlines, it's sort of delving into the story a little bit more and finding out a bit more about it, and then realising, well, actually, it's a bit more nuanced than what it may seem
100%.
on face value anyway.
There's a lot of new distilleries coming on board in 2026 in terms of being at the stage to release liquid. I mean, we've seen a huge amount of distilleries, not just in Scotland, but in England and Ireland and globally. Do you think we're going to reach a saturation point, at which point investors are just either not going to be able to keep buying those bottles or investing in the casks?
Choice is a good thing, right? And and I have to tread a fine line, because we do investment, but then we have consumables, right? One cask at a time and things like that. So choice is not a bad thing. If you were to ask me if I had the capital, would I open the distillery right now? Well, you maybe would think maybe not, right? Maybe not. Would I go and buy one that was already operational? That's a different story. So as I said, I think choice is not a bad thing. There's always a run-up to decisions like that being made, right? And even building the distillery, the infrastructure,
10-year planning,
exactly that.
Huge,
and no one probably anticipated a sort of dip in the sector as they have now. But again, it's if I tie it back to the investment and the way that we look at things and the distilleries that we work with, the reason we work with and try to offer the distilleries that we do is because ultimately there's a pedigree there, right? If you've been operational for 100 years, then okay, we're pretty confident you're going to be around for a few years longer, right? And it's exactly. Hopefully, but it's not just that. It's if you're a new distillery, you've got to find that market share. You've got your routes to market. Everything is anything from a standing start is always harder. And it'd be interesting to see what happens. And where things can go. On a broad point, a lot of distilleries make gin, but gin's softened a little bit, right? So where do you find your cash flow
at the beginning stages?
Exactly that. And when we've worked with newer distilleries from an investment perspective, and it's just picking the right ones. anyone can build a distillery, anyone can make liquid, but how is that going to then translate into a decent ROI, right? How does that distillery then become sought after in 5, 10, 15 years time? Because you can get contracts, you can take liquid, and they'll willingly do it. Yeah. But then at the same point, where are you going with it? Because in 10 years' time, if the distillery is no longer around, it's a ghost distillery, that's great. But then you've still got to find somewhere to try and get it consumed, because ultimately all it just becomes is an asset that matures forever, and
and
you're still trying to find.
You can't do anything
exactly,
with it.
So there's a balance there between finding. It's not just it's not cut and dry in terms of, right, well, I can buy a cask of whiskey and I can buy it from that distillery and it's going to make me money. It will age, it will accrue, but at the same time you've got to think about the exit and what that looks like as well. Been on a bit of a tangent there.
No, it's I think it's so important, because we see these new distilleries come online and it's really exciting, and I, as well as a consumer, I get excited because I'm like, oh, there's new liquid,
Exactly, yeah.
But then it's like, how loyal will people be? Will they just actually go back to what they've been drinking for the last 10 years, or and how do these distilleries navigate this market, and where is there? I think from an investment perspective, it's always, what is that exit strategy?
Well, and that's where tariffs tie in as well. Like that audience overseas, how do you get there? A distributor is going to be keen to take your liquid when they've, if they've got others, distilleries more established that people are familiar with. How invested are they in telling your story to a global audience? And that's it's a really nuanced world from a consumer standpoint, and it's the investment sector is a little bit more straightforward, particularly at the moment.
At the moment, So 2026, definitely some glimmers of hope out there amongst. We've like, clients made on average 13.84% last year, so we're pretty confident, and then we've got a lot of exciting ventures that are in the pipeline for 2026, and obviously we launched our independent line in 25, but we've got one in the States which will be going live this year. So I think there's a lot to be excited about, and again, it's just the narrative that it's where do you see it? Where do you see the market? There's an industry like Scotch, because all right, the overall pitch is a little bit slower. Does that mean it's a non-viable avenue to explore? No, absolutely not. And again, bourbon, the domestic market's still big, right? So as long as you're not trying to shift bourbon from the States to Canada, then there's a good chance you'll find some success. And globally, consumption's massive. The audience is massive. You've only got to tap into 1, 2, 3% of a global audience, and your brand's worth what? I would say on a side point to that, Diageo are probably wondering about their tequila purchases over the years, so but maybe a slight stepping back from.
I'm sure there's someone in the boardroom somewhere like, no, did we not think that was a good idea? But
everyone says it's going to be the next big
thing.
Exactly,
it was for a while, but
saying it for 20 years.
Yeah, exactly, yeah. So, but I think the year ahead will be interesting, and the naysayers of an industry will continue to be naysayers, but there's also the people that will be a bit more objective, a bit more real. And again, it's from the investor standpoint, there's opportunities. There's liquid that will come available, because there will need to be some monetization of inventory in Scotland.
Absolutely.
And we're trying to make sure we're well placed to get access to that. Because as I said, our investment is not a short-term one, and our investors know that. And ultimately, if you look at it the way it should be treated, and it's a 3, 5, 10-year hold, then or beyond, then we're pretty confident in the brands we have access to and who we work with, that there's a future value attached to that. And the redemptions we've shown and seen would really back that up. So I think the year ahead is one that we're positive about. I don't think it'll be straightforward. It may not be without its ups and downs, but that's just the nature of any market, no matter what it is. So I think broadly we're optimistic on the whole.
Excellent. I feel good just chatting to you. It's a gloomy day here in London, but I'm feeling more positive.
Good weather for tea.
Good positivity about the year ahead, at least in, as you say, finding the opportunities in the right moments is the most important thing. So
absolutely,
fantastic. Well, Ben, good luck with all the hats, the juggling,
cheers.
And look forward to seeing what happens over 2026.
Thanks for having me again.
Cheers.
Nice to see you.
Thank you.
Cheers.